All right, so let's dive into Bitcoin today.
Sounds good.
Specifically, we're going to try and figure out what's been driving its recent price volatility.
Right.
For this deep dive, you've shared a mix of news articles, some analysis pieces, and even some on-chain data.
Yeah.
Looks like you really want to get to the bottom of these CME gaps that everyone's talking about. Do they actually predict Bitcoin's future price movements?
Right.
I mean, that's the big question, isn't it? And then we've got all this debate surrounding the Bitcoin bull market and the Federal Reserve's influence.
Yeah. No, definitely a lot to unpack.
It really is. It's like we're trying to read tea leaves, but with like a million different teacups.
Yeah.
And speaking of reading the signs, Bitcoin had a pretty dramatic fall on February 27th.
Yeah, it did.
It fell out of that $90,000 to $110,000 range that it had been comfortable in for a while, and it even dipped below $86,300 at one point.
Yeah.
Which is the lowest it's been in months, so
Yeah.
something's going on.
It is. And to understand what could be happening, we have to consider that the market has been in what's called risk-off mode lately.
Okay.
So basically, there have been these kind of unexpected events, and they've spooked traders.
Right.
And so they're reacting more strongly to any potential drops.
Okay.
And this is where these CME gaps come in.
Okay, so can you just remind me what exactly a CME gap is? It has something to do with futures trading, right?
Yeah, exactly. So a CME gap is basically a blank space on a price chart where no trading occurred in the CME Bitcoin futures market.
Okay.
And this often happens because the futures market has these specific trading hours, unlike the spot Bitcoin market, which is open 24/7.
Right.
So when the futures market opens, the price sometimes jumps up, and that creates the gap you see on the chart.
I see. So is there a particular gap that everyone's talking about right now?
Yeah, there is. A lot of attention is on the gap that formed on November 5th, 2024, between $77,000 and $81,000.
Okay.
It happened right after Trump's surprise election win, which ironically actually caused a surge in Bitcoin's price.
Okay.
And that's how this type of gap, a runaway gap, is formed. It happens during a strong upward trend.
Interesting. Okay, but why is this gap such a big deal now, months later?
Well, it's a common belief among traders that CME gaps tend to get filled eventually.
Okay.
Like the market has a memory, and it wants to revisit those price levels that were skipped over. In fact, one analyst actually stated that historically, CME gaps are filled eventually. Of course, predicting when exactly is a different story.
Right. So are you saying that Bitcoin dropping towards $80,000 could be the market, like filling that November gap?
Well, that's certainly one interpretation,
Okay.
but it's not that simple.
Okay.
Remember, we mentioned this was a runaway gap.
Yeah.
And what's interesting is that from a technical analysis perspective, runaway gaps are actually less likely to be filled than other types.
Okay.
They tend to happen during times of strong momentum,
Okay.
not reversals. So is this drop the start of a gap fill or just like a blip? That's the question.
Yeah, okay, so we've got this November gap hanging over the market, but you also mentioned there's another new CME gap to think about.
You're exactly right. Another gap formed more recently between February 24th and 25th as Bitcoin was dropping.
Oh, wow, so we've got two.
So yeah, we have two to watch.
Okay.
Which definitely adds to the uncertainty.
No wonder everyone's on edge.
Right.
But I'm curious, beyond traders watching these gaps, what's the overall feeling in the market right now?
Well, the overall sentiment is definitely what we call risk off.
Okay.
To put it simply, investors are more cautious and moving their money away from riskier assets like Bitcoin and into safer assets like government bonds.
Got it.
A good indicator of this sentiment is the Crypto Fear and Greed Index, which actually plunged to multi-year lows this week.
Oh, wow.
Even lower than during the FTX collapse.
Wow. Okay, so that paints a picture.
It does.
It makes sense that people are trying to grasp at any potential clues about where things might go next. And speaking of clues, what about this analyst, Marty Party, who claims the real bull market hasn't even started yet?
Yeah.
That seems like a pretty bold statement considering how much Bitcoin has gone up already.
It is a bold statement, but his reasoning is interesting.
Okay.
He argues that this recent rally we've seen was mainly fueled by institutional adoption, particularly through those spot Bitcoin ETFs that finally got approved.
So he's saying big institutions buying in isn't enough to create a true bull market?
His point is that historically, crypto bull markets have really taken off when the Federal Reserve, or the Fed, has been in what's called easing mode, meaning they're lowering interest rates, increasing the money supply, and essentially encouraging people to take more risks.
Okay.
But since 2022, the Fed has actually been doing the opposite. They've been tightening to fight inflation.
So what does Marty Party think is going to trigger this bull market he's predicting?
He believes it will happen when the Fed finally pivots from tightening to easing, specifically when they switch from what's called quantitative tightening, QT, to quantitative easing, QE.
I see.
He actually sees the current market dip as a potential bear trap, a false drop that could quickly reverse.
Okay.
His advice: buy Bitcoin during these dips.
So basically, we're all just waiting to see what the Fed is going to do.
It's definitely a major factor. You know, the FE's actions have a huge influence on the market. There's a key date to watch, March 19th.
Okay.
That's when the Federal Open Market Committee, FOMC, will meet, and everyone will be looking for any hints about their future plans.
So we've got these CME gaps that might act as price magnets.
Yeah.
In this overall market sentiment that's pretty fearful, and the Fed is looming over everything.
Right.
It's a lot to take in, but are there any signs that Bitcoin might be starting to turn things around?
Well, it did rebound slightly after hitting that new low on February 26th.
Okay.
And if we look at certain technical indicators...
Hold on. Before we go too deep into the technical stuff, what are the charts telling us simply?
Okay, so there's this metric called the short-term holder, MVRV, which basically looks at whether short-term holders of Bitcoin are in profit or loss. You recently get below 1, which historically has indicated that Bitcoin might be undervalued, and it could be a potential reversal point.
Okay.
It's not a guarantee, of course, but it's something to consider.
I see. So there are some hints of a potential reversal.
Right.
It feels like a real tug-of-war between fear and hope with the Fed as the referee.
Yeah, doesn't he?
But before we declare a winner, let's look at some on-chain data and see what's happening beneath the surface.
Let's do it. Yeah, looking at on-chain data can help us really get a better understanding of what's happening beneath the surface.
Right.
It's like getting a behind-the-scenes look at how people are actually using Bitcoin.
So it's not just about the charts and the technical indicators.
Right.
We can actually see people's behavior.
Exactly. One of the most insightful things we can track on-chain is the movement of Bitcoin between different types of wallets. So, for example, are coins flowing from exchanges to personal wallets or the other way around?
Okay.
This can tell us a lot about whether people are generally buying or selling.
So if we see a lot of Bitcoin leaving exchanges, that's usually a good sign, right?
Right.
Like people are moving their coins into cold storage.
Exactly.
Planning to hold them long term.
Yeah, it usually suggests that people are in it for the long haul.
Right.
And they're not looking to sell quickly.
Got it.
On the other hand, if we see large amounts of Bitcoin flowing into exchanges, it could mean people are getting ready to sell.
Right. Right.
Which could signal a bearish sentiment.
Makes sense. It's like watching the flow of traffic to get a sense of where everyone's going.
Exactly.
What other on-chain signals can we look at?
Another important one is transaction volume.
Okay.
Basically, how much Bitcoin is actually being transacted on the network.
Right.
High transaction volume usually indicates that the network is being used actively, which is generally a positive sign.
Because it means people are actually using Bitcoin, not just like holding on to it.
Not just holding it as like a speculative asset.
Exactly.
They're actually using it for transactions and things like that.
Oh.
And along with transaction volume, we can also look at the number of active addresses.
Okay.
Essentially, how many unique wallets are participating on the network.
Right.
A growing number of active addresses suggests that more people are using Bitcoin.
Okay.
Which, again, is another positive sign for its long-term growth.
So it seems like on-chain data provides a much more concrete picture of what's happening beyond just the hype and speculation.
It does. It cuts through a lot of the noise.
Yeah.
Strong on-chain metrics can give us confidence that Bitcoin is actually being used and adopted.
Yeah.
Even when the price is going through a turbulent period.
It's amazing how much information we can get just by analyzing these on-chain metrics.
Yeah.
It's like having a secret window into the Bitcoin network.
Yeah.
What other insights can we uncover by looking at this data?
We can actually dive deeper into specific metrics that give us even more granular insights.
Okay.
For instance, we can look at the age of the coins being transacted.
Oh.
Are they mostly older coins that have been dormant for a while, or are they newer coins that have been recently mined or purchased? This can give us clues about who's buying and selling, long-term holders, or newer investors.
So if we see a lot of older coins moving, does that usually mean that, like, experienced Bitcoin holders are selling?
Not necessarily. It depends on the context.
Okay.
Sometimes large movements of old coins could be whales rebalancing their portfolios or even moving funds to more secure storage.
Okay.
It's like piecing together a puzzle. We need to consider all the pieces and look for patterns.
So on-chain analysis can get pretty complex.
It can be, but there are tools and resources that can help make sense of this data.
Right.
And remember, even just understanding the basics can give you a much deeper understanding of what's driving the market.
So let's go back to what we were discussing earlier.
Okay.
We've got those CME gaps, the risk-off sentiment, and this whole debate about the FAD's role. How does on-chain data play into all of this?
Well, for example, looking at the exchange inflow and outflow data can help us understand if the recent price drop was driven by panic selling or if it was more controlled.
So if we saw a huge spike in Bitcoin flowing into exchanges during the drop, that would suggest panic selling, right?
Exactly. And if the outflow from exchanges remains steady or even increased, it might suggest that long-term holders are using this dip as a buying opportunity.
Okay.
Which would actually be a bullish sign.
That makes a lot of sense. It's like getting a pulse check on the market's emotions.
Yeah, exactly.
But what about those CME gaps? Can on-chain data tell us if they're going to get filled?
Unfortunately, there's no direct correlation we can draw between on-chain data and CME gap filling.
Okay.
The gaps themselves are a product of the futures market, which operates somewhat independently of the underlying spot market.
So even with all this data, predicting the future is still a gamble.
Predicting the future is always going to be a challenge. But what on-chain data does is provide us with these valuable insights that can help us make more informed decisions. Right. And it can help us to understand the underlying forces that are at play.
It's like we're gathering all the pieces of the puzzle even if we don't have the complete picture yet.
Precisely. And remember, Marty Party believes this dip is a buying opportunity.
All right.
His thesis rests heavily on the FAD pivoting to QE.
Right.
Which would likely create a more favorable environment for risk assets like Bitcoin.
So on-chain data could potentially help us assess whether Marty Party's prediction is playing out.
It certainly could if we see, for example, a significant increase in on-chain activity, things like transaction volume, active addresses, and large transactions.
Yeah.
Alongside a FAD pivot to QE, that would strengthen his argument and suggest that the bull market is indeed on its way.
Okay, I'm starting to see how all these pieces fit together.
Yeah.
We've got the technical indicators, the market sentiment, the FAD's actions, and now the on-chain data. It's like having a multidimensional view of the market.
Exactly. And the more we understand each of these aspects, the better equipped we are to navigate the Bitcoin market and make more informed decisions.
It feels like we've learned so much already, but I'm sure there's even more to explore.
Oh, yeah, definitely.
Where should we go from here?
Well, one area we haven't really touched on yet is the impact of regulations on the Bitcoin market.
Oh, right. Yeah.
Governments around the world are starting to take notice of Bitcoin and other cryptocurrencies. And their actions could have a significant impact on the future of the industry.
It feels like regulations are always looming in the background.
They are, and they can be a source of both opportunity and risk.
Okay.
For example, clear and favorable regulations could lead to more institutional adoption and mainstream acceptance of Bitcoin.
Right.
But on the other hand, stricter regulations could stifle innovation and limit its growth.
So how do we even begin to understand this whole regulatory landscape? It seems so complex.
It can be, but there are resources and experts who can help us navigate this complex world.
Okay.
And remember, the regulatory landscape is constantly evolving, so it's important to stay informed and adapt as needed.
So we need to keep an eye on regulations alongside everything else we've been discussing.
We do. It's a lot to juggle.
Yeah, it is.
But that's part of what makes the Bitcoin market so dynamic and fascinating.
Right.
There's always something new to learn and consider.
I think we need to take a moment to just appreciate how much ground we've covered in this deep dive.
Yeah, absolutely.
We started with Bitcoin's price drop, explored CME gaps and market sentiment, considered the FAD's role,
Right.
and even delved into this world of on-chain data.
We did.
And now we're adding regulatory considerations to the mix.
It's been quite a journey.
It really has.
And it's important to remember this is just the beginning.
Right.
The world of Bitcoin is constantly evolving.
Yeah.
So continuous learning and adaptation are key to navigating this exciting space.
Absolutely. And for our listeners out there, remember, understanding these different facets of the market doesn't guarantee you'll predict the future perfectly.
Right.
But it does give you a much richer understanding of what's happening and why.
Exactly. It's like learning a new language. The more fluent you become, the better equipped you are to make those informed decisions and navigate this ever-changing landscape of Bitcoin.
Well said. I think we've laid a solid foundation here.
Yeah.
Now let's shift gears and explore some specific examples of these on-chain metrics
Okay.
and what they can tell us about the current state of the Bitcoin market. Okay, so we've covered a ton of ground already. CME gaps, market sentiment, the FED's role, on-chain data. It's a lot.
It is, yeah.
But I want to get into some specific examples of these on-chain metrics.
Sure.
See what they can tell us about what's happening in the Bitcoin market, like right now, you know?
Absolutely. Let's start with one we talked about earlier, the movement of Bitcoin between those exchanges and personal wallets.
Right.
That's a great way to gauge whether people are generally like buying or selling.
Okay.
For instance, if we see a large amount of Bitcoin flowing out of exchanges into personal wallets, especially cold wallets, those offline ones,
right,
that's usually a really bullish signal.
Right, because it suggests that people are putting their Bitcoin in cold storage for the long term.
Exactly. They're not planning to sell anytime soon.
Got it.
It's like they're putting their Bitcoin in a safe, locking it away.
Yeah.
Now, on the other hand, if we see a surge of Bitcoin going into exchanges, well, that could mean people are getting ready to sell.
Right.
Could be a bearish sentiment.
It's like watching for that rush to the exits. So what's the data telling us right now in terms of exchange flows?
Well, it's interesting. Despite the recent price drop and this whole risk-off sentiment, the exchange outflow has actually remained pretty steady. In fact, some analysts have said that there hasn't been like a big spike in inflows to exchanges during this dip, which suggests that those long-term holders, they're not panicking. Might even be using this as a chance to buy more.
Interesting. So even though there's fear in the air, the on-chain data suggests that the conviction of those who are in it for the long haul hasn't wavered.
It seems that way.
Okay.
Now, another key metric is the transaction volume, how much Bitcoin is being transacted on the network.
Right.
High transaction volume, generally a positive sign, shows the network is being used actively.
Right. It's being used as a real currency, not just...
Right, exactly. Not just a digital gold.
Yeah.
People are actually using it.
So what's the transaction volume telling us right now?
Well, it's been a bit subdued in recent weeks, which isn't too surprising given all the uncertainty.
Right.
But there was a noticeable spike in volume on February 26th, right when Bitcoin hit that new low.
Okay.
Could indicate that some investors were buying the dip.
So that volume spike and the steady exchange outflow paints a sort of optimistic picture.
Yeah, it does.
Even though the price has taken a hit. There's almost a disconnect between that market sentiment and the on-chain activity.
There does seem to be a divergence.
Okay, let's look at another metric, the number of active addresses on the Bitcoin network.
Okay.
Essentially, this tells us how many unique wallets are doing transactions.
Right, exactly.
A growing number, that's usually a positive sign for the network's growth.
It is, yeah. More active addresses, more people are using Bitcoin.
Okay, so what are we seeing right now with active addresses?
Well, the trend has been a bit flat in recent weeks.
Okay.
Mirroring that kind of subdued transaction volume, probably reflecting that cautious sentiment.
Right.
But worth noting that the number of active addresses is still way higher than it was a year ago.
Right.
So the user base is still growing over the long term.
So even though short-term activity is slowing down because of market conditions, overall adoption of Bitcoin still going up.
Seems that way. That's what's fascinating about on-chain analysis.
Yeah.
Let's just look beyond those headlines. Get a more a nuanced understanding of what's really happening.
It's like a more objective way to look at the market, not just about the emotions and speculation.
Right.
It's about the data.
It is. And while on-chain data can't predict the future, it can help us make more informed decisions.
Right.
Navigate the market with a greater sense of awareness.
This has been incredibly insightful. We started with that simple question of what's driving Bitcoin's price.
Yeah.
And we explored, well, everything. Technical indicators, the FED, on-chain data, regulations. Wow.
We've explored a lot. And you know what? All these different factors are really interconnected.
Yeah.
Understanding them gives us a much richer understanding of what's shaping the Bitcoin market.
It's like we assembled this huge puzzle.
It is.
Might be some pieces missing, but we've got a way clearer picture.
We do. And remember, this is just the start. This world is always evolving. Always more to learn, more to analyze, new trends popping up.
So to our listeners, keep exploring, dive deeper into those on-chain metrics.
Absolutely.
Stay informed about regulations. Yeah. Keep learning about the technology.
Yes.
And remember, whether you're a seasoned trader or just starting out, the key is to stay curious, keep learning, and never stop asking questions.
Absolutely. The world of Bitcoin is full of surprises.
It is.
The more you understand, the better you'll be able to navigate it all.
I think that's a great place to end it. Thanks for joining me on this deep dive.
It's been a pleasure.